Hello and welcome to Share Talk. I am Bonnie Hughes. Today we are speaking with Hayden Locke, CEO of Emmerson PLC. They have a potash project in Morocco, and they just came out with a feasibility study that shows they could be potentially one of the top low-cost producers. And here to tell us all about the company is Hayden Locke. Hello, Hayden, and thank you for joining us.
Thanks, Bonnie. Good to be here.
So last week you came out with a feasibility study that showed a much improved economics over your scoping study. Do you want to give us an overview of that?
Yeah, it was a very culmination of a lot of hard work, as you can imagine, given what's going on in the world with coronavirus and all that sort of stuff, to achieve delivering that feasibility study ahead of our original timelines. We're very happy with the result. Headline capital cost has come down, making us an even lower cost potash project, which we've always said is incredibly rare and probably the most important selling point of this project. Headline economics have improved quite significantly from this scoping study, and so we're very pleased with the overall result.
And I noticed that one of the ways that you've reduced the cost is by having a byproduct of de-icing salt. How did you come up with that?
Well, one of the traditional byproducts of any potash mine in the world is actually NaCl. But the difference with our project and the reason why it can become an interesting little side byproduct is because we are so close to our end markets. So being very close to the US de-icing salt market meant that we always thought that there was the potential we could take some of that byproduct and sell it and make some money from it. What came out of the feasibility study is, in fact, it's going to be a nice little earner. It's still not anywhere near of the scale of the potash project, but a very nice little earner on the side.
And so the market for de-icing salt in the US, they're obviously not self-sufficient if you're shipping salt over there.
No, that's right. They are self-sufficient in some areas. So in the Midwest, they do have a lot of salt mines and a lot of salt production. Where we're going to be targeting is the East Coast US markets. So that's really from as far north as Maine, all the way down that coast to kind of Baltimore and that area. That currently, it's about a 10 million tonne a year market, and it's currently majority supplied with salt coming from Chile in South America, from Mexico, the Pacific side of Mexico, and actually from Morocco already. So it's a fairly large market, and we're going to hopefully be a relatively small portion of that.
And you've signed a memorandum of understanding for an offtake with the potash. Are they going to provide upfront capex, or is that just in process?
That's one of the things that we're going to start to really investigate now that we've got this feasibility study, because we have a view as a company that there are a lot of groups who would love to get their hands on our offtake from the potash mine. It's very much a closed industry and oligopoly, so hard to get your hands on new supply. But we have a very strong view that any strategic partner that wants a long-term offtake contract from us should be putting in money to help us build the project.
And so there's going to be a new port that's being built, which will be closer to your project. Will that be ready in time by the time you finish construction?
We don't know is the answer to that. You're talking about the Khemisset and Atlantic port, which is about 120, 130 kilometres closer to our project. It is under construction. It is mooted to be in production by 2025, which would mean that it is, coinciding with the early part of our project years. From a project execution and a risk management perspective, we can't rely on that, so we will be having the go-forward case as the Port of Casablanca, which is one of the biggest ports in Africa, and we've done a huge amount of work with the authorities there to manage our execution risk in delivering our product to market. What's important, though, is the same port authority that manages Casablanca will also manage the Port of Khemisset and Atlantic, and we know that they would love us to be a cornerstone of any new port development there. And given the long life of the project, I think there is a strong potential that we'll eventually ship out of Khemisset, and that'll only be beneficial for our project.
And with regard to mine permitting, do you now have to move towards getting a permit for the mine?
Exactly right. We are in the process of doing our ESIA, environmental, social and impact assessment, to IFC performance standard levels. That should be completed at some point in the second half of this year, so in the next 6 months. And then that is really the catalyst to take us into the mine permitting and allowing us to convert all of our exploration permits into exploitation permits.
And are you looking at debt financing and equity financing for the capex of the project?
Yeah, we're looking at, I think it's safe to say that nothing is off the table in terms of the potential to finance this project. So we're looking at traditional debt and equity. We're also looking at strategic partners, obviously, and then we're looking at non-traditional means. But we are examining every single option in order to find what we think is the optimal mix for our current shareholders in terms of financing this project.
And I just noticed that last week Morocco adopted new legislation to attract investment in mining in the country. That is obviously a positive for you as well.
They have been really focused on trying to get companies like us to come and invest in the country. I often make the comment that despite the fact that it's one of the most geologically well-endowed countries in Africa, and it does have a number of large mining companies operating there, it is relatively nascent in terms of the industry development from an outsider's perspective. And as a result, the government is really working hard to attract groups like us, and that is coming through in all of the legislation that they have put out, which includes very favourable fiscal terms to support companies like us and make it all that more attractive for us to continue to invest in the country.
And so what can investors expect to hear from you for the next coming months with regard to the company and the project?
The two big focuses for me are really on permitting. Obviously, it's a key driver of any future development is having the full permits in place. So I'll be focused a lot on that, and then also the financing. But we'll be continuing to do some work. We also have the SOP project, which we put out a scoping study for, which we will look to convert into a PFS, that higher level of engineering. And we're also actually going to start examining the potential to increase the size of our salt product production. And really, we know that we will produce multiples of what we've planned to sell as of this feasibility study. So we see a big opportunity to potentially improve our economics by upscaling the amount of salt we sell into that US Deicing Salt market. And so that's really the focus for the next 6 to 9 months.
Does the feasibility study with regard to the salt, does that include shipping all the way to the US or just to the port?
No, that includes shipping all the way to the delivery port, which we've assumed to be Boston or New Jersey in the East Coast US.
Excellent. Well, Hayden, thank you so much for speaking with us today, and we look forward to seeing your upcoming news and hopefully word on a strategic investor for the company, which would be very helpful. So we'd like to speak to you again soon.
Thanks, Bonnie.
And thank you for joining us on Share Talk. Have a great day.